All right, guys, back to work. Back to work. Boy, what a reversal this afternoon. Definitely not that bull trap we talked about in last night's video. That's okay, though. We'll keep on rolling here this week. The good news, though, is anytime we see a big move, look at this big move we're seeing higher here this afternoon. Anytime we see a big move like this, there are two specific types of trades we always look for the following day. We'll talk about those two trades. I'm going to make sure you guys have a game plan to make some money on Wednesday. Before we jump in, though, and to my favorite trades for Wednesday, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button for me. Give me a shout out, give me a holler down in the comment section below. Thank you so much for tuning in, supporting the channel. But enough of the intro. Let's go make some more money on what could be a very busy day tomorrow in our trade room. Charts are all ready, as you can see here tonight. Nasdaq triple Qs are ready. Oh, the E-mini and the SPY is ready. I have two really important clues on these charts right now that are telling us where the winning trades are waiting for us tomorrow. One of those clues is right here on the 60-minute time frame. The first time in weeks, we get above the 21 EMA, pull back, and the buyers are jumping and separating off that 21 EMA. The first time in weeks above the moving average, pulling back and jumping off that moving average. We call these 1, 2, 3 reversals in our trade room. And I'll tell you, this may be nothing more than a relief rally after a couple days down, a couple weeks down here on the SPY and the Nasdaq. But I'll tell you, in most cases, when you see the market get above that 21 EMA, jump and separate off that 21, usually that means the buyers have control of this trend. So it may not be permanent. We get some big earnings reports coming out this week and next, but as of right now, these buyers have taken control of that short-term momentum. Now, the 60-minute time frame is fantastic for giving us the best direction, but the direction is always the easy part, right? The hard part is timing the entries properly. I have another important clue on the tick chart tonight that will tell us how to time the perfect entries for tomorrow. Before we dive into the tick charts, before we talk about entries for tomorrow, let's double check our schedule for tomorrow. There's two important things on my radar, and you want to have on your radar as well. First things first is the durable goods orders at 8:30 Eastern time. I always love seeing big news early in the session. Get the markets moving for us tomorrow morning at 8:30 Eastern time. And of course, the big news tomorrow afternoon, we go back to the earnings calendar once again. Tesla, of course, running hot after the report came out this afternoon. We got another big tech company, another big Mag 7, big part of the overall market cap that's reporting this week here. So just like today, expect some big headlines tomorrow afternoon as we cruise our way through peak week, second week of earnings season. So be aware of that tomorrow afternoon, and also too be aware of that durable goods orders tomorrow at 8:30 Eastern time. Back to our charts though. It's good to know when the news is, but the money is made on the charts. I talked about earlier here in the video, I have two important clues right now. One of those clues on the 60-minute, and you can see, right, it's been weeks since every time we've gone above the 21 EMA, the buyers have been unable to get anything going. That's how you know it's a bear market. And again, first time now in weeks, back above that 21 EMA, and that jump accelerating, separating off the 21. This gives buyers all of the momentum right now, at least for now, right? We'll see if they can hold the momentum in earnings next few days here. But now, let's talk entries now. Tick charts. This is a 7,000 tick chart, you'll notice. Upper left-hand corner, we do not trade off time charts. Time charts are so much more difficult to get good entry setups. We use tick charts in our trade room. This, of course, if you're watching for the first time right now, this is the 21 EMA. It's pretty much the only indicator you need to find lots of winning trades each week with us in our members' trade room. There's one really important clue, one big clue you might call this on this tick chart, and that, of course, is a big move higher, a big pop up, keep grinding. Now, whenever we see a big move like this, there's always two specific types of trades I look for the following day. Why don't we start first with the most common scenario, and later on in the video, we'll talk about that second scenario that we may not get tomorrow, but I'll tell you, the second scenario is even easier. We'll talk about that here in a moment. Anytime we see a big move in one direction, I don't want to buy high. I want to buy nice and low. And to do that, I'm going to look for what's called a two-legged pullback. Now, what's a two-legged pullback? A two-legged pullback, inside of our free trading classes, we talk about measured moves, right? Measured moves are symmetry, right? So A, B, C, D. When I think of a two-legged pullback, I think of a market that pulls back a little bit more than a measured move, right? A bit more than that measured move. Now, that gives us the idea of where we want to buy for tomorrow. But remember, oftentimes these two-legged pullbacks, they're so strong, it can be difficult to pick the bottom on this. I can't pick that bottom. So how do we time the entry on this? What we want to do is you want to get that two-legged pullback bit more than a measured move, and then don't try picking the bottom on this. What I'll do is I'm going to wait for some rookie bears to come in. This is not a good spot to sell short, right? This is the worst place you want to sell short, and we'll talk about how to short this thing during the pullback here in a moment. Don't you worry. But if I can get some bears coming in here and trap those bears in, I would love to look for the bears to try twice down here. Now, why twice? Because if I can get the bears to chase after this two-legged pullback and then commit twice, see, now I know where their stops are. Now I know where their pain is, and I can trade right into their pain. This usually results in a strong snap right back higher, and you want to look for what we call a bear trap entry. Bear traps are very simple. It's a higher high in price and a move just below that low. So again, anytime I have a big move in one direction, I don't want to buy high. I want to buy nice and low. To get nice and low, I want to get that 1, 2, a bit more than a measured move. And again, I'm not gonna try to pick the bottom on that, right? Because it may roll all the way back down. And again, I will talk about how to short that, how to trade that here in a moment. But if I can get the rookies coming in, let them try twice on this. Again, it'd be a 2-try failure pattern like you guys are learning in the free video course. Get those rookies trapped in, buy into those stop loss, the failure pattern. Then as we go higher, grab that, again, a bear trap pattern. It's that higher high in price, move right below that low. Lots of examples of that stuff inside of the free trading course. Now, let's talk about some variations of this, because this is kind of the fundamental of one of the two types of trades I look for tomorrow. Sometimes we get lucky. Sometimes we'll get a nice deep two-legged pullback. We'll get those bears trapped in with 1, 2. We'll get that nice easy winner going higher, but for whatever reason, sometimes this thing is so strong going lower, it'll hold the underbelly there of that first leg down, and the bears will come in and try to whack that thing right back down again. Now, this is not a reversal just yet. If it keeps going, it becomes a reversal, and we'll talk about how to trade that here in a moment. The most important thing, though, now is now think about this. Anybody who sold short, their profit targets are where? Probably back to retest the low. So anybody who sold short on that shallow pullback right now, they become buyers as they buy their way out. This is where we want to do it again, right? We call these double bottom reversals. After a big move up like this, again, we may get that strong two-legged pullback. We may get our 1-to-1 target. We may get an easy winner off of that. Stop moves up to point of entry. But again, instead of going back to retest the highs, like we know most of them want to do, it may roll over and retest that low. Do not chase it running lower. Trap them in. Bears once, bears twice. I need those bears trapped because I need to use their stops as fuel to run this thing back up again. And again, it's that 2-try failure pattern into as we go higher. It's that higher high in price. It's that bear trap pattern right below that low. So the most important thing is to wait for that two-legged pullback right now and then look for those failures. All right, failures into those bear trap patterns and going right back up to retest the high. That's one of the two game plans on my radar for tomorrow. Now, let's slow down for a second, right? Because I know most of you guys and gals watching right now, you know these already. You know failures, you know traps, you know why two-legged pullbacks work so well. But listen, if you're watching for the first time right now, I look at things a bit differently than a lot of YouTubers do, right? This might be a brand new language. This could be all brand new for you. But don't you worry. I teach all these entry patterns. I have hundreds of examples of these setups, all taught in a whole lot more detail in our free video classes. I'll put a link up top here for you. Don't you worry. Hit that link that popped up there and take that free trading course, because the strategy you're going to learn in that short video series will teach you a stupidly simple trick we use in our members trade room to know where the best winning trades are going to be each day. And then I want to help you start making money on your own each day. I'll teach you 4 my favorite entry patterns. You'll learn traps, you'll learn failures, and a whole lot more, all taught in that free video course. Guys, the markets are way too good right now. If you're not making consistent money, if you're missing the best trades each day, if you're tired of struggling to qualify for a funded account at Apex or Top Step, hit the link, take that free course. Perfect for someone trying to make the jump into full-time trading. Also be aware too, I'm going to put all the important links we talked about tonight, the description of the YouTube video, the free class links. I would definitely start first with the free video course. We trade together every day in our trade room, 8 o'clock Eastern time. I'll put trade room information in the description as well. And also too, I post a lot of updates throughout the day on X or Twitter. If you're on X or Twitter, give me a follow. All the details there, the description of the YouTube video. But definitely make sure you take that free video course, because it'll give you an easy roadmap and make it easier to find the winning trades each day. Now you know kind of the foundation of one of the 2 entry patterns I'm looking for tomorrow. Let's cover some variations of this, because it's earnings season. There's a lot of up and downs right now. For example, I love the idea of getting that 2-legged pullback. I love the idea of trapping those bears in and squeezing their stops. However, sometimes we don't get that bear trap down there. Sometimes what happens is we get that 2-legged pullback. There are so many buyers up there, it just wham, right back up again, right? These can be really frustrating, because what happens oftentimes in these is it'll snap right back up and begin to grind and grind. Once it begins to grind like that, if you're anything like me, that little voice in your head will start talking trash, right? Go, come on, man, get in. You're going to miss this, dummy, right? You don't want to chase after this, okay? Because what's going to happen is eventually the buyers want to come back in and buy low again. What to do is draw a trend line off those highs, mark a channel off that low. And what do we always say in these videos? Look left, find a prior swing, and this is usually where the best entries are going to be. Now, this could be a bear trap, like I'm showing you right here. It could be a buyer failure pattern, right? It could be a pullback combination. Any of the entry patterns. I can't teach them all, unfortunately, in this video, but you guys will learn a lot more about the actual entry tactics, entry techniques in that free video course I mentioned earlier. We call these V bottom, right? V bottom reversals. I love the idea of buying that nice dip, but sometimes we don't get it, and the V bottoms off of that low. Target, of course, is back up to retest that high. And then one other small variation of this is we have this kind of pop and grind going higher. Okay, in my video classes, we call these spiking channels, right? Spike up into a channel. We know one thing about spiking channels. Spiking channels love to pull back into the base of that channel. So again, I would love to get that 2-legged pullback nice and deep and back up again. That'd be great, right? But again, we may not get that. I want to make sure you guys have some different variations of this, because I want to make sure we have a roadmap no matter what we get here for tomorrow. Now, this is a challenging situation, right? Because if all we get is a shallow pullback right now, remember, I don't want to buy too high right now. And also, too, this could still be a bear market overall. I don't want to get too aggressive at buying a shallow pullback right now. This is where you look for what I call a shallow pullback trap. I want to buy as low as I possibly can. To do that in a shallow pullback, we look for what we call a bear trap, right? It's a higher high in price. It's a higher high in price, a move just below that little interim low, a strong green candle, right? And that will give us the signal for that run going back higher. Now, I wouldn't complain at all if we saw that pattern down here too, right? So I wouldn't complain at all if we saw the bear trap pattern after a 2-legged pullback, but it's not required, right? Not required. But if I have a shallow pullback, I want to buy as low as I possibly can, which means I can't buy it as it's going higher, right? You're walking, a lot of cases, you're walking right into a bull trap in that situation. I want to buy as low as I can, and the way we do that is always with a bear trap. Higher high in price, a trap below the low. A lot of examples of those inside the free trading course. All right, guys? Now, last but not least here, and we'll go to the Nasdaq here in a moment. How could I sell a market like this? How could I sell something like this? There are three different kind of ways in which you can think to short this thing. First of all, on the pullback. Right, on the pullback, in order for me to get a good short on this, I need some fuel, right? Right now, we're very bullish. And so momentum is not helping me at all, right? Momentum is all bullish right now. So if I want to short this thing, I need something to counterbalance all of that bullish momentum. And this is where we look for crown reversals or bull traps. Now, what's a bull trap look like? It's just like it sounds. The buyers will come in. They're going to try to keep buying this thing up here at these highs. I don't want to buy up here. I want to buy nice and low. But if I can get some rookies coming in, chasing after it, buying once, buying twice. Now, we talked earlier about what a bear trap looks like, right? A bear trap is a higher high in price and a move right below that low. That's a bear trap. One of my favorite trades, going back up to retest the high. A bull trap is the same idea. It's just the opposite, right? It's a lower low in price and move right above that high. Now remember, this is going against all that bullish momentum we talked about on the 60-minute time frame. When I take a counter trend trade like that, I use a half size position, a quarter size position. So be aware, these are not as high percentage as buying a pullback in a bull market. Again, smaller size, protect your capital because the odds are much less. So that would be the crown reversal. Now I can think of two spots we might use that. First of all is on the pullback itself, right? That crown reversal on the pullback. Now think about there is your two-legged pullback now. Moving average comes over. We trap those bears in with that failure pattern. We go back up to retest the high. Now, once we retest the high, think about it. Anybody who bought long down there, their profit will be where? Probably back up at that high. Another place to look for that crown reversal, that short, is a retest of the high. We talked about a double bottom reversal earlier on in this video. This, of course, will be a double top reversal. The difference, though, is again, in this scenario, we're very bullish. So in order for me to fight that overall momentum, I need to get that buyers once. I need to get buyers twice. Why? Because, again, I need to use their stops, right? I need their stops to fuel this move back down again because, again, I don't have momentum on my side. But if I can get that lower low in price, that bull trap off the high, that strong signal candle we talk about in the free trading course, that'd be another option there for a short. So again, half size position, quarter size position, either on the pullback or really the higher percentage version of this is the one off the retest the high, right? Because now the buyers got what they want and the bears can now take what they want as well. Okay. One other variation, I mentioned earlier that this may be nothing more than a relief rally overall on the 60-minute time frame. If at any point this thing shoots lower and begins to grind, it's almost the exact same scenario we have right now. I'll look for a trend line off that low. I'll bring it up around that high. And remember, anytime we see a big move in one direction, what do we always look for? We look for that two-legged pullback and that retest of that low. Find that new channel. And unfortunately, I can't teach all the entry tactics in this video tonight. But again, you'll learn more about that in the free trading course. Think about that two-legged pullback, a bit more than a measured move, and we'll grab a bull trap, a buyer failure, want that first test off the high of that channel, right? I don't usually talk about both sides like this, but again, because the 60-minute time frame, we're not quite guaranteed this reversal will hold here at this point. So that's the backup game plan if the whole bottom gets pulled out of it with some earnings overnight and, of course, tomorrow morning. All right, guys? Now, that covers one of the two scenarios, two trades I'm tracking for tomorrow, along with some variations of this because you probably have noticed already, the markets are wild sometimes, and I don't want to leave you hanging in case we get some variations of this. Now, let's talk Nasdaq now. Over on the Nasdaq is very similar to the S&P in the sense that we've been bearish here for quite some time here on the 60-minute time frame. And the first time in weeks, right, we've now got above the moving average and jumping, right, and separating off the 21 EMA. Look how the bears separate below the 21 EMA. Look how the buyers are unable to hold above the 21 EMA. That's a bear bear market. Once those bears are unable to hold things below it and the buyers come in and jump and separate off that 21 EMA, again, may not be permanent with earnings coming out this week, but in a lot of cases, though, this is a sign of a bullish reversal. So for now, the buyers certainly do have control of this momentum. Now, overnight tick charts. Remember, we do not trade off time charts. We always trade off tick charts. A 4,000 tick chart on the Nasdaq and the same 21 EMA. I talked about earlier how whenever we see a big move in one direction like this, we expect a two-legged pullback and a retest of the high. That same game plan applies to the Nasdaq, and all the variations we talked about a moment ago in the S&P can also be applied to the Nasdaq as well. The second scenario, which is not as common, but I think even easier, to be honest with you, than the two-legged pullback, is a range scenario. See, sometimes what happens is sometimes we get these big moves higher and nobody dares to short it, right? Because it's so strong bull, right? And nobody takes their profit, right? So it never kind of pulls back. It's too high to buy. It's too strong to sell, right? So sometimes what happens is as we start going sideways. Now, I don't have a crystal ball on this. I don't know where that range will be. But if we start seeing a trading range, the two things you want to think about is ranges act like magnets, all right? And they love to rotate back and forth, right? So the amount above, the amount below. They love to rotate back and forth. We call these pendulum swings. If you're in my free video classes right now, this should be a review, right? We know you're learning all this in the free video course, right? So ranges love to rotate back and forth like a pendulum, all right? So understanding that now, there are two basic ways I like to look for this if we do go sideways in a range. The first one is pretty simple. If we now go to a trading range going sideways here, what we'll do is we're going to find levels of support, right, underneath that trading range. In the free video class, we talk about pendulums, we talk about triangles, so you'll learn more there. The key, though, is find levels of support below the range, then wait for a breakout. Now, ranges. The one thing you don't want to do in a range is trust a breakout because ranges act like magnets. So what I'll do is I'm not going to short that thing, right? I'm not going to short it. I'm also not going to try to pick the bottom on that either. Before on the S&P, we'll come in, trap those bears in, squeeze those stops. Think about that failure into that, what was it again? That bear trap combination. You can see it's very similar, but now we use the range though as the magnet, right? Now think about this. Ranges love to rotate. So failure pattern, bear trap pattern. I always should take some profit off at the top of that range and then leave a runner, because one thing about ranges, they love to rotate, right? Leave that runner, and that will give you an objective now of where to take the final piece of that position off. Remember, guys, the easiest way to make more money is to let those trades run better, right? You want to make more money, don't trade more often, right? Don't trade more frequently. Get better at holding on to your winners, and ranges make it really easy to do that. Now, there's one very important variation of this that you want to think about, and that is the fake out breakout. These are very, very common in range markets. After a really big move up like this, we oftentimes see the market try to run higher. But of course, there's no buyers up there. Nobody wants to buy high, and the market winds up basically running right back down again. Now, this is where that crown reversal short trade I talked about earlier comes in handy. Buyers trying once, buyers trying twice. Needs to be a bull trap off this high because you're going against the overall direction. Now, think about that now. Where does the market want to go? It wants to take out the pendulum swing on the other side of that range. This now, if you're short off the top, becomes a final target. More importantly, this now is where we can look for some bear traps, right? Moving average comes over, same idea, right? We rope those bears in. Can we all agree this is a horrible spot to be a seller? Right? I would not want to sell that. Not yet, at least. If it kept going, then I could go in for a breakout pullback. Right? If it kept going, then I could, right? If we exceed through that pendulum swing by a good margin, then I could look at this as a breakout pullback, right? But At this point, we're simply holding inside of that range rotation. Trap those bears in, use those stops to fuel the move, right? Stops get run. Again, as always, trade that rotation with that bear trap pattern as we're going, right? So again, think about this one. Don't get caught chasing that breakout going higher. We're already very high up on the chart right now. And again, we're not 100% sure this bull market is going to hold right now with the earnings reports coming out later on in the week. So trap those buyers in. Don't get trapped above that high. Use that pendulum swing on the side of on the other side of that rotation. Don't pick the bottom, right? Because again, it may end up rolling, right? Going lower here. Don't pick the bottom, trap those bears in, that failure, right? That bear trap combination, and you know now where the market wants to go from there. Now think about this too, right? If we were to run through that low, right? If they were to rotate off that high, this is where that kind of pop and grind comes in, right? If they were to shoot through that pendulum swing, which, you know, with earnings week this week, it wouldn't totally shock me at all, right? A bit head fake off the high and roll through. The challenge, of course, will be, I don't want to sell here. Right, we're a bit too low to sell. I want to see now, do they keep on rolling? And if they do, grinding down, same thing, right? Find that new trend line there, pin it up around these big highs, look left, find some prior swings, right? Get that two-legged pullback, and we'll go in and grab whichever entry pattern we can find. Hopefully a bull trap up there, a buyer failure off that high, and that would be, of course, the reversal trade as we roll back over again. All right, guys? That's the plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, the easiest way to start making consistent money in the markets is to come out and trade this with me. Learn with us, ask a bunch of questions, trade right along every morning, 8 o'clock Eastern time in our trade room. I'll put all the important links you need, the description of the YouTube video. I would definitely recommend start first with the free classes, get a good foundation underneath you. I think sometime soon we'll see you trading with us sometime soon in the morning room with members at 8 o'clock Eastern time. Any questions, comments, concerns, any issues getting started, please don't be afraid to call the office or use live chat. We're always here to help out every step of the process, so don't be a stranger. We'll be here to help out if you have questions along the way. All right, guys, fantastic job today. Big day coming tomorrow. Will these buyers hold this reversal, or is this nothing more than a slow walk up for their big rock down? The game is good, though. The game is ready for tomorrow. Now we get a good night's sleep. Come back to do it tomorrow morning in our trade room. In the meantime, be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye-bye for now.